Welcome to the latest edition of Fundamentals. This time around, I'm going to look at an actively managed member of our list of 72 favourite funds, namely Franklin UK Midcap. This is in fact the latest addition to our favourite funds list, and it has come in as a replacement for the River and Mercantile Small Cap Fund, where the lead fund manager has left after an investigation into a personal conduct issue. This was apparently unrelated into an ongoing inquiry by the Financial Conduct Authority involving 4 fund management groups, one of which was River and Mercantile, amid allegations of price collusion when it came to the pricing of new company flotations in 2014 and 2015. Now, as for the new inclusion, Franklin UK Midcap, as its name rather suggests, it primarily invests in firms which form the FTSE 250 index here in Britain. Fund manager Paul Spencer's mandate is to provide capital growth over the long term. He's a very highly experienced manager with some 30 years in the markets and 12 as the lead manager on this fund. He tends to look for higher quality businesses and focuses on the sustainability of the business, its management strength, the balance sheet, and finally valuation. The fund is actively managed and turnover can increase over short time periods as the manager seeks and finds new opportunities. As I sit here, the portfolio is a very high conviction list of just 35 stocks, with just 5% of the 1 billion fund held in cash. The top 5 holdings are brickmaker Ibstock, engineer Bodycote, retirement financial services product specialist Just Group, real estate investment trust Derwent London, and kitchens expert Howden Joinery. By sector, the 3 biggest exposures are consumer discretionary, financial services and industrials. By contrast, the fund has a 0 weighting in telecoms, energy, consumer staples and utilities, as we can see here. The fund comes with an ongoing charge figure of 0.82%, so you do have to pay for the manager's expertise, and it also has a 12-month yield of 2.22%, which will come in the form of 2 dividends a year, although in this case we are talking about the fund's accumulation units, so it automatically reinvests any dividends for you. Franklin UK Midcap is eligible for SIPs, ISAs and dealing accounts, and the minimum investment is just the 1 share. For those who put faith in such things, it's got a 4-star Morningstar ranking. So those are the mechanics. The question to address next is why could investors consider this fund for portfolio inclusion today? And I think there may be 3 possible reasons. The first is you may think that early February's wobble in the stock market is overdone and it's a chance to pick up assets more cheaply, especially as the FTSE 250 fell by nearly 8% from its peak, as we can see here. The second is you think midcaps may be a better option for you than the behemoths of the FTSE 100. This fund's avoidance of the energy, telecom, utility and consumer staple sectors mean you're getting exposure to a very different and more growth-oriented group of companies than perhaps you would from most of the collectives that would put your money to work in the FTSE 100. The third, well, that's the fund's own good track record, which can be seen over the last 5 years right here. However, this is not to say that the Franklin UK Midcap Fund will suit every investor, also for 3 possible reasons. First, you might take the view that the UK stock market is overdue a rougher time after a near 9-year bull run that stretches back to March 2009. We can see the FTSE 250 over that time period here. After all, a combination of lofty valuations, particularly using market cap to GDP for instance, lowly volatility and rising interest rates, well, that's historically led to more difficult markets in the past, even if, as we know, history is by no means guaranteed to repeat itself. Second, you may feel that overseas markets offer better growth or income prospects than the UK, especially if you fear that Brexit could have a negative impact on the outlook for the UK economy. And finally, the yield of 2.2% may not strike too many chords with income-oriented investors who may prefer in fact to look towards the FTSE 100 where the prospective yield is over 4% for 2018, according to consensus analyst forecasts. What all of that goes to show is that you must therefore do your own research on Franklin UK Midcap Fund to make sure that it fits with your overall strategy, target returns, time horizon and appetite for risk before you even think of putting any capital to work. Thank you for watching and I look forward to seeing you next time.